There's thousands of strategies in the stock market, but it's very hard to find one that actually works. So many traders come to me, they're in their 9 to 5s, they want to leave, or they're in college, they're in school, and they just want to stop. They want to have time, location, and financial freedom. So in this video, I'm going to be going over this strategy that you can use to easily make $500 plus every single day. This strategy has made me over $14,700 in a single day in hundreds of $3,000, $4,000, $5,000, $6,000 days. But it didn't always start like this. I was once a trader making $100 a day, $200 a day, $300 a day, and then taking losses, and then getting dismotivated, and then not knowing what to do. So in this video, I'm bringing it all together, the strategy that I use and that you can use to easily make $250 every single day. The strategy is extremely unique because most traders like to buy low and sell high, but that's why most traders lose. I like to buy high and sell higher, or short low, sell lower. What does that mean? It means I like to trade the trend. If something's moving in one way, why would I bet it's gonna go the other way? Why would I try and bet it's gonna stop when instead I can trade while it's keep going in that direction? I'd rather play the trend. I'd rather move and trade the stock in the direction that it's moving because it makes it so much easier to make money, and it makes my risk to reward a lot better as long as my win rate. I mean, if a train was coming at you with full speed, would you want to jump in front of it and hope it stops? No. Let the train stop and hop on the trade and ride the trade. Same thing with the stock market. So right here, as you guys can see, we have a chart. This is our pre-market data. This is all our pre-market data, okay? Anything behind this line. So all this right here, pre-market data, pre-market data. Now the market's open. We're going to use the market open candles as blue. What do we want to look for? First things first, we want to mark our pre-market highs, and we want to mark our pre-market lows. And then we want to wait for either a 5-minute close under pre-market low or a 5-minute close above pre-market high. This does not have to be off the open. This is how I'm showing in this example. So then once we get that 5-minute close either below or above the pre-market low or pre-market high, we want to look for some sort of retest. So we want to see us come back up, test the level and reject if we're shorting and we're entering put on this reject. Or for calls, what we basically want to do is trade the retest. You want it to come back down, tap this level, tap the break of structure level, and go right back up. So basically all we're doing is view this as the stock market. Boom, 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 right? Say this is your chart. All we want is a pullback to this resistance where we rejected off of. Why? Because this level is always going to become support. So this resistance level is going to become support. So then think about it. What's our next level? All we're going to do is wait for it to come down to the next resistance. That's our entry, and boom, it's gonna keep on becoming support. But say we go under it, right? Say we go under it, what's gonna happen? The support is then going to become resistance. It's then going to become resistance. So this is a basis of it. You mark our pre-market highs, we mark our pre-market lows. We wait for either a 5-minute close above pre-market high or below pre-market low, and that's how we identify the break of structure. So 5-minute close above and a retest equals calls. 5-minute close below and a retest equals puts. But there are a few things that we need to go over. That's just a brief overview. Let's go over the actual setup. First things first, you need to identify the stock. For me, I like to look over the same types of stocks every single morning. I like to look over SPY, QQQ, NVIDIA, AMD, Apple, Tesla, Meta, those big stocks that have a lot of liquidity and I can trade the options on very easily. And then I want to see what's up the most or what's down the most. Whatever's up the most is the one I'm going to be trading calls on. Whatever's down the most is the one I want to be trading puts on. Say the indexes, SPY and QQQ are both green. That means I'm going to be trading the stocks that have strength, the stocks that are up the most. So this day we had Tesla. Tesla was very, very weak. Now, what happens, guys? What do we do here? These are some real examples. We mark the pre-market low, we mark the pre-market high. And as we can see, what happens? We get a 5-minute close under pre-market low, right? 5-minute close under pre-market low. And what is this? This is a retest. This is where we're buying puts. We're thinking it's going to go down. Why? Because it broke structure. It broke structure to the downside. That means the trend is down. That means that the train is moving. The train is moving. If we break structure, that means it's going down. The trend is down. So what happens? We take this retest. We buy puts. And man, it just rides all the way down. As simple as that. Let's do an example of when it went up. So this was our pre-market high. This blue line is our pre-market high. We mark our pre-market high. What happens, guys? What do we get right here? We get a 5-minute close above pre-market high. Then we get a retest. What are we doing in this retest? We're buying calls. We're trading calls on this retest right here. As what happened? We broke the pre-market high. This trend is moving. The train is moving now. So we're going to buy calls on the retest. As simple as that. Let's go over another example. Mark the pre-market high. What happens? We get a 5-minute close over. Now what are we looking for? We're looking for it to pull back and come to the VWAP. Now what are we waiting for? We're waiting for it to come back down and hit the pre-market high. What happens? We come right back down. We test this pre-market high 1, 2, 3 times. That means it's held it really, really well. We went from literally holding this pre-market high to the new high of day. Just like that. That is how you trade the trend. That is how you catch these moves. You have your chop. You wait for it to break out. You trade the retest and you bank. As simple as that. As simple as that. And the same thing to the downside. We have our chop. Boom, 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 boom. Oh, we trade the retest and we bank. And worst comes to worst, we get above the level, we just get out. As simple as that. The truth is, it's not going to be that simple to get started. There's one more key step. The strategy does not work if you do not incorporate this step. So, if you've been learning along the way, let's do a little recap. We mark our pre-market highs, we mark our pre-market lows. We wait for a 5-minute close over pre-market high or a 5-minute close under pre-market low. Once we get that 5-minute close over or under, we're looking for a retest. And we're typically trading in the first 1 hour of the day, the first hour. Now that we know the retest, the break of structures, there's a big indicator that we need to talk about, and it's called the VWAP. This is basically an indicator that I use called the volume weighted average price. It tells me where buyers and sellers are averagely at. And on top of VWAP, we need to go over how do you know when to sell. Okay. Let's do this, guys. Right here, we have VWAP. It's this yellow line right here. What happens? We break above pre-market high. We break above the key level right here. And we're above the key levels. We're above the VWAP. So I'm going to make this very, very, very simple for you. And I'm going to write it out for you. Okay? If VWAP is above pre-market high, then you always trade the VWAP retest. If VWAP is under the pre-market high, then you always trade the pre-market high retest. So basically all I mean, right here we have a 5-minute close over pre-market high, and what happened? VWAP was over the pre-market high as well. What does that mean? That means we're taking the VWAP retest. So listen, guys, if VWAP is ever above pre-market high, then we're not trading the pre-market high retest. We're trading the VWAP retest. And if it goes under VWAP, the pre-market high, you do not take it. You don't take the pre-market high retest. Once we get under VWAP, it's a failed setup. So look, if we're above pre-market high, then we're trading the VWAP retest. So right here, we enter calls on the VWAP retest. We would not be waiting for a retest to here. Why? Because VWAP's above pre-market high. So we're trading the VWAP retest right here. And we bank. I mean, all day. We just keep tapping VWAP. We keep entering on these retests. We keep entering on these retests, and we just print. As long as we're above VWAP, we could stay in. As long as we're above VWAP. So let's do a little recap. Let's do a test. Let's do a test of 2 different scenarios. So this is going to be scenario number 1. We have a chart here, and this is going to be our pre-market data. And then in green is going to be our regular trading hours data. Here, as you guys can see, the yellow is the VWAP. This is the pre-market high, and this is the stock. On this stock, the green line, are we going to wait for it to come down to pre-market high? Or are we going to just take the VWAP retest since VWAP is above pre-market high? We're going to take the VWAP retest because VWAP is above pre-market high, as we can see in this example right here. But what happens if a stock's like this? And what happens here is VWAP is under the pre-market high. That means that we're taking the pre-market high retest because VWAP's under it. That means we could take it. We're always trying to take the closest retest because once you reject a retest spot, that means the trend isn't working. The buyers aren't stepping in. So you always want to take the nearest retest as long as a pre-market high retest or VWAP retest or pre-market lower VWAP retest. And VWAP does work to the downside as well, guys. Again, it does work to the downside as well. But as we can see here, VWAP retest, VWAP retest. So guys, how about right here? What do we have on Tesla right here? Okay, guys, here's an example of a VWAP retest and pre-market low retest to the downside. This is a huge setup. One thing I want to tell you guys about, this is when it gets A+. If you ever have a VWAP retest lined up with the pre-market low retest, that means it's an absolute A+ trade. So if the VWAP and the pre-market level ever line up, meaning it's 2 retests in one, not only is the pre-market level retest, but it's a VWAP retest, then it's absolutely A+. So as we can see here, we're testing pre-market low and VWAP. We're taking puts there. Next thing we're doing, we're taking trims at new low of day. And then after that, we're just keep trimming at big key levels. So the next key level was previous high a day. We trim some more here, and then we have a big level at 255 psychological level. We're going to trim some more there. So that's how you know how to trim. You're always trimming at previous high of days, previous low of days, pre-market levels, and overall key levels, meaning levels the stock has rejected off of or bounced off of more than 3 times on a daily time frame, or a psychological level, which is basically every $5. So 250, 255, 260, 265, 270. As we approach those levels, you always want to trade and trim on those levels. Okay, so let's summarize the setup. Every single morning, we want to mark our pre-market highs, this top blue line, and our pre-market lows, this bottom blue line. Here, it gets close to it, but why do we not get the confirmation? There is no 5-minute close under pre-market low. Next, we chop a little bit, and then we break over pre-market high with a 5-minute close right here. This indicates to us that we're trading calls. We want to see a retest of pre-market high. Next thing you know, we get the pre-market high retest. Here we're taking the pre-market high retest because VWAP is under pre-market high, as we can see. So this right here is our entry for calls. Next, what are we doing? We're trimming at new high of day, and we're trimming at big levels. What did I say? Every $5 is a pretty big level, correct? What are we approaching here? 185. So we're taking trims up to this 185 level. And then we stay above the pre-market high, so there's no reason to get out. We just continue ripping to new high of day. And that is a strategy you can use to easily make anywhere from $250 to $500 plus every single day. And you may ask, PB, when do we stop out? Very simple. So we're taking this trade on the pre-market high retest, right? If we were to get a 5-minute close under the pre-market high retest, so say right here, if we were to get a candle like this, after we took it, we get out. So 5-minute close under the retest, we get out, take our small loss. Small losses, big wins. We're trading the trend. We're making a lot of money. While trading this setup, let the trades come to you. Don't always think you need to be in a trade 24/7. No, this setup works the best when you're calm, collected, and you're letting the setups come to you. And obviously, make sure you use proper risk management. Don't sell unless the charts are telling you to sell, and make sure you take your stop losses very, very fast, and you have your key levels always marked down. Now that you've learned the strategy, it's time that you take action. Start building up your account. Start adding up those base hits so that your $250 every single day can then turn into $2,500 every single day, and then $10,000 every single day. You could do it. If I could do it at 17 years old, then I promise you could too. I'm not a super genius. I'm nothing like that. I'm just a person just like you. There's no difference. If there's people doing it, you need to tell yourself in your head, I need to make failure not an option. If PB can do it, if these other traders can do it, then I could too. And that's the mindset you need to have if you want to be part of the 1%.